All right, welcome everybody to another Duck the IRS podcast. I am your host, Parham Khorsandi. I got my main man, Will Fugate here. Will has been working with us in our firm for almost 15 years now, preparing returns as a licensed enrolled agent with the IRS. Will, welcome to Duck the IRS.
Thank you, P. Thanks for having me.
Yeah, absolutely. So today we have a fun topic that we're going to be discussing, which is a huge topic, and it was Will's idea to bring this up, and that's why we have him on, is unfiled returns.
I think it's an important topic. I think a lot of people out there who are nervous because they got IRS letters, they owe the IRS. One of the main things or the common things with owing the IRS is unfiled returns.
Yeah.
We know that.
And that makes sense because, people are not scared of the IRS when they're getting refunds. Those are not our clients. That's not the typical taxpayer who is scared of the IRS, is somebody on wages who is just waiting to get a refund. The people that are scared of the IRS, the people that lose some sleep, are the people that are going to owe money. And so when you're scared of the IRS and you're going to owe money, the first instinct is, well, I'm not going to file a return because I'm going to owe money and I don't want them to know that I'm going to have to pay them. So let me not file the return, which is a big mistake.
Yeah, 100%. And they don't understand that not filing return is the issue where they end up owing a lot more.
Right.
Not just what their balance was, not just the interest. A lot of people have a misconception of like, oh, I'm paying interest. The IRS is charging me high interest. That's not the case, really. The case really is the penalties that they're being charged. I mean, they have the penalty for not paying, but the IRS also charges a penalty for not filing.
Yeah.
And so as you know,
that's huge, guys. I just want to make sure everybody understood what Will is saying is you're going to have a penalty for not paying the IRS, which if you don't have the money, you don't have the money. I mean, if you can't pay, fine. But a big penalty, it's a 25%, right?
Yeah. So
a 25%
a month, up to 25%. So let's say scenario, you have a return, you're going to owe, so then you get scared and you don't file.
Typical situation.
Now, if you were to file it, you just have a penalty for not paying and then some interest. Well, if you don't file, now you basically double those penalties.
You're right.
Because the penalty for not paying and the interest is maybe about 5%. So it's not too much. It does add up, but then you end up doubling it.
Yeah.
By just not a simple thing as filing. You could just file the return. So
that's huge. Even if you do owe and you're going to owe and you can't make the payment, you can avoid a 25% failure to file penalty by filing on time. So let's just put some numbers to this. If you're going to file your return and you know you're going to owe money, and let's say you think you're going to owe $10,000, if you don't file your return, you're going to get hit with the tax, the $10,000, the interest, the failure to file penalty, and the failure to pay penalty. And so those are just compounding on top of each other. The best thing to do is to still file on time to avoid that 25% failure to file penalty. And that doesn't really cost a lot of money. Yes, maybe to prepare with somebody, but ultimately you want to make sure that you're filing your return to avoid this 25% penalty.
Yeah, along with unfiled returns is, always file an extension, whether you file on time before April 15th or not. You probably should just file an extension. That extension will give you that additional time.
Yeah.
The other big issue besides the penalties on unfiled returns is the statute of limitations. So if you're not filing those returns, you're keeping that statute of limitations of the IRS coming and poking around and being nosy in your business. You're keeping that open.
Yeah, that's right. So you have 3 years from the time you filed a return for the IRS to make changes in an audit. And that's typically, there are some small exceptions for fraud and other things, but typically the IRS only has 3 years to look at your books and audit you and examine you. Well, that 3 years clock starts when you file the actual return. So if you don't file the return, you're kind of leaving it open-ended for the IRS to come examine you anytime. So if I were to file my 2017 tax return right now, even though 2017 was 8 years ago, it's not going to make a difference. The IRS would still have 3 years from the date of filing to audit the return. So by not filing, Will's absolutely right. You're also exposing yourself for a much longer term where the IRS would be able to examine and audit your tax return.
And good luck trying to find receipts 10 years down the line, let alone a couple years down the line.
Correct. Absolutely.
So dealing with an audit at that point, it's just a nightmare that you don't want. So you could avoid it by getting those returns filed. The other issue I see is with couples now recently is a lot of people get engaged and they're about to get married, and most people don't talk about their tax situation. They might talk about their finances, but they don't really talk about their tax situation. So then the other couple obviously is nervous in the background, not bringing it up. The one spouse who's not bringing it, he or she is not bringing it up that they owe the IRS a bunch of money, and then they decide to get married and they want to get a house, and now they got to get a loan, and now the tax debt kind of rears its ugly head, and we've seen it. How many times we've seen it? All the time. You know, so and these are situations that you gotta handle it. You gotta take care of it.
And filing your return, it happens so often because every taxpayer needs to file the return. And because everybody's doing it and it happens every year, you kind of don't think about it. And a lot of people are like that. I'm sometimes like that myself, where it's like, okay, what do I need to do to file my return as quickly as possible with the least amount of burden on me and get the best results? That doesn't always work out because you could be making mistakes. You could not hire the right person. And to have a correct tax return on file, you have to put in a little bit of effort. You got to do this. And the reason why I'm saying that to all our viewers is because everyone's in that boat. That should not be an excuse not to file a return. Having the tax returns be burdensome for you is part of being an American taxpayer. It's the golden red tape of America is this tax return. That's what it's built on.
Nobody likes to file.
Nobody likes to file. Nobody wants to do it.
I don't like to file. I'm just like everybody else. I have to file my own return. It's probably the worst return that I prepare because I don't want to prepare it. I got to put in the work to prepare it. It's usually I'm doing all my clients' returns first and trying to get them done, and then mine's coming down to the wire to get done. So
everyone's in the same boat.
Yeah,
everyone's in the same boat. These unfiled returns, it could be a little uncomfortable to get the returns filed. However, it's going to be super important because we talked about a few things, and then we'll talk about a couple more just as a quick recap. So yes, we're all uncomfortable when tax season comes. Even I am, and I'm a tax attorney. We have our preparer here who's been doing this for, 30 years. So we get uncomfortable doing it. Everyone's in the same boat. You have to file your returns. You can avoid a 25% penalty. You start the clock on the audit risks. And also, if you don't file a return, what happens if you don't file? What is the IRS going to do, Will, if you don't file a return?
Yeah. So you got two big situations, right? So you got the one situation of getting that penalty, and then you got the other situations. The IRS is just going to prepare a return for you in the worst case scenario. So
they're going to do you a favor by filing a tax return, and you're going to owe way more than you should.
Yeah. They're going to say, hey, John Smith, we're going to go ahead and prepare a return since you haven't. And we're going to give you no deductions. We're going to prepare the worst possible outcome that can be. That's the stance we're going to take. And we're going to charge penalties, interest, and everything on that. So it's important to... That's
a horrible situation.
To go and get your return filed, get the deductions that you're entitled to, get that tax bill lowered. If you have a 1099, they're not going to give you any expenses against it.
Yeah.
If you have stock sales, they're just going to do it based on the proceeds, not your cost basis, not what you bought.
Yeah, let's break that down a little bit. So let's say that you are self-employed, sole prop, single member LLC, something, and you're earning income, and you have a 1099 of $100,000, all right, and you're too busy, you're too stressed, your parents got sick, your daughter moved to college, and you didn't file your tax return. The IRS is going to see that you made $100,000 because anytime you receive a 1099 from anywhere, the IRS receives that same copy. So if you don't file a return, the IRS is going to look at that 100,000 and they're going to say, okay, he or she, Mr. or Mrs. Taxpayer, made $100,000 and they're going to tax you on that $100,000. You're still going to get hit with the failure to file penalty. You're still going to get hit with the failure to pay penalty. You're still going to get interest, but now they're taxing you on the 100,000. Well, if you think about it, the person who earned 100,000, they probably have a bunch of business expenses, no? Supplies, rent potentially, marketing, advertising, meals, whatever it is that they're paying for, the IRS is not going to give you those deductions. They don't know what you spent to earn that 100,000. So ultimately, if they file for you, you're going to get taxed at a much higher bracket on much higher income.
Yeah, so I would say address whatever fear that you have that's holding you back from filing. Just look at that, acknowledge it, so that way you can say, what's holding me back? Is it because I don't have all my receipts together and I don't feel confident filing? I would say just file the return anyways. Make your judgment as far as, especially if you're a sole proprietor, just file the return, make the judgment on the expenses. And then if you need to fix it, you can amend. But I see a lot of clients hold back. They're like, I don't have all my receipts. And IRS is still going to know that you owe them. They're still going to come after you whether you file or not.
Right.
So a lot of times thinking that, hey, I'm just not going to file, I don't have all my receipts and everything together, is not the best route to go. You really need to just, if you don't have all your receipts, you need to make the most educated guess. You know your business better than the IRS. Make the educated guess on the expenses, and then then you could deal with the unlikely scenario of an audit if you get that. I mean, your preparer should be keeping you out of those audit ranges. So
that's true.
If they know what they're doing.
The audit risk is like less than 2% nationwide. So the risk of audit is not high. So if you have to make some best estimates or best guesses or use whatever resources you have to put the best tax return forward, we would suggest that you do that and file on time, because it is a slippery slope. You don't file for 1 year and you saw how nice it was that you didn't file and you didn't have to deal with it. Look at all these suckers stressed out during tax season. You're going to not file again. And then it could go down where you haven't filed for a few years. Now the IRS has filed for you. You owe a bunch of money to the IRS. You can't get any financing because you haven't filed a tax return. Nobody will lend to you. And if you want to qualify for any government assistance programs, you're going to be in trouble. And this was huge during COVID, where people were looking for the PPP or the EIDL and all these handouts that we had.
Couldn't get it.
You couldn't get it because you didn't file your return. So there could be a lot of situations where not filing a return can come and bite you in the butt. And also, once you get over the fear and you have a good accountant or a CPA, enrolled agent, somebody helping you to file the return, that should really ease the burden. And also, if you think of it as this is a good way for me to understand my own business, provide information, ask questions, somebody holding you accountable during tax season for what you've done in the previous year, it could really shed insight on a business owner of what they should be doing on a next year to maybe decrease their taxes or increase their profits.
Yeah, data will help. I mean, 100%. Your finances will be better overall, for sure. There's no doubt about that. The other gripe I have about not filing the return is basically kind of the way the IRS system is, and the whole free filing and file for free. The way the IRS system is built, again, it's built to when you file for free or you don't file and the IRS files a return for you, they're going to take the worst case scenario. And if you do the free filing, so when you prepare your return yourself, what happens usually is that you might miss deductions. Well, the IRS is not built to give you a call and let you know, hey, you get a refund. Here you go. You missed this deduction. They're not built that way, but they are built. They know what all the income, they know what you have. So they are built to send you a letter. Hey, you missed this 1099. You owe us this interest and penalties and this taxes on this missed 1099. So that's kind of my sidebar gripe about.
So the IRS will be really quick to tell you that you missed some income and you owe them more money. But what they will not do is say, hey, you missed this deduction and you get a bigger credit. So, the IRS it's a necessary evil in the U.S. 94% of the U.S. budget comes from the IRS.
Though, right? Like, you got to know.
So you're going to have to deal with them. And Will's right. It's better to deal with them on your own terms than deal with them on their terms. So necessary evil of filing the returns. We all go through it. You're hearing it from a tax attorney. You're hearing it from a preparer. We all go through that motion of, I really don't want to spend time and energy on this to prepare the return. But the alternative is way worse. You're going to get a bunch of penalties. The IRS can file for you. You're opening yourself up to higher audit risk. And so all of these factors push us to have situations like this where we're letting the public know, if you're not going to do anything, you should definitely file your return on time. It'll save you so much money down the line.
Yeah, that's why I wanted to touch on it. I think it's so important. Yep. I can't stress it enough how important it is and how common I see it with people who end up owing a large chunk of their balance is due to unfiled returns. Yep. So now, even if you have unfiled returns right now, start getting those filed, start filing on time. The last topic I want to touch on unfiled returns is, and this is up your alley, it's basically you can't negotiate with the IRS until the returns are filed.
Yep, absolutely. That's a huge one.
Yeah.
So what Will is saying, and it's absolutely true, is even if you owe money to the IRS, they will not take an offer in compromise. They will not take an installment agreement. And some penalties, they won't even get reduced until you have filed all of your returns. So if you have missing returns and you owe money, there's no option other than either pay or stick your head in the sand, because you can't set up a resolution with the IRS if you have missing returns. So that's another huge reason, and I didn't even think about that. That's great thinking, Will, where you can't even set up a payment plan. You can't do anything. You're stuck until those returns are filed. So if you do have unfiled returns, make sure you get them filed. If you owe money, that's okay. That's honestly not a difficult time for thing to do. We can help you. Anybody can help you with your balance due. And the number one thing is get the returns filed. There should be no excuse to file on time.
Yeah, if you don't file, you have penalty, unfiled return, the penalty, failure to file penalty. You have the worst case scenario of the IRS preparing a return for you.
Yep.
And then you also have, you can't negotiate. So you have those three things right there.
And increased audit risk. Your audit time is open.
Audit time.
So
4 things that
those are huge.
That are like major things when it comes to just the tax world that will just save you.
Simply by filing a return.
So get those returns filed.
Yeah. Will, thanks so much for all the knowledge. Will Fugate, our guest today on Duck the IRS podcast. I've been your host.
Hopefully this helps.
Yep, absolutely. It's always great to get guest that has this much knowledge and understanding of not only how to prepare the returns, but how the IRS works as well. Hopefully it's been informative for you guys, and we'll catch you later.